Welcome to today's session and thanks for joining. In these videos, I show how you can swing trade profitably in any market condition, up, down or sideways by taking only high probability and low risk trades that have maximum forces from the market, sector, industry, fundamental, technical and even seasonality in their favor. I will revisit some trade ideas I shared recently before knowing the results as usual. I will explain how I am managing those. If you stay with me, I will show some stocks getting ready to buy or short. We'll decide that based on the market preferred trading direction from today's recap, whether to buy or short. And also look to buy, look to identify some stocks that you may trade Monday. You could trade them on Friday near the close as well if you could find them in real time using Q systems. Anyone could. How to know the market is entering a headwind and profit from it? Using the headwind technical signal, of course. It is invaluable to get a hint from the market before it starts to pull back from the top or recovers from the bottom. That is what the Q headwind signal does. It works in almost a mysterious way. Even I am not sure why it works the way it does, and I never ignore it. It does not appear before every reversal at the top or bottom, but when it does appear, it carries significance. The significance is multiplied when multiple headwinds come in related symbols, for example, market ETFs, which are related, or stocks in the same industry, etc. That is happening right now. The significance is also increased when headwinds come in multiple time frames of the same symbol like weekly and daily together. At minimum, seeing that headwind, you may protect profit in positions in the prevailing trend. You could also alter the strategy, like instead of using naked short put, maybe you were very bullish in a stock, you were using naked short put to get the premium over and over again, and then you notice a bearish headwind coming at the top. That could lead you to switch to short put vertical strategy instead of continuing to use the naked short put strategy, even for the strongest stock in your view. Nvidia will be a recent example. I will come to that trend. And when all the checklist conditions, all the Q trade setups, not signals, but Q trade setups have unambiguous checklists, very small checklists for all of them. When all the checklist conditions for headwind setup is met, it is perfectly okay to take the reversal trade. Those tend to be really small risk trades, and I will cover some live examples of that with high potential rewards. Advisable strategy is using option verticals that avoid getting whipsawed by a sudden last move in the prevailing trend direction, which is common at the top and bottom where the headwinds tend to appear. So after headwinds, it is not uncommon to have a false breakout in the prevailing trend direction. Using the options vertical strategy avoids one getting stopped out. The current and recent markets have displayed multiple headwinds, both bullish and bearish. We'll look at some of those in today's session. That will include recent and even current as of today trade setups you might take using headwind. From these live examples, you will see why I pay close attention to the headwind signal and setup, and equally importantly, how I use them to increase the probability of success and overall profit. Greetings. I am Sagar Nandi, retired IT professional swing trading stocks in the USA and India markets using only Q systems and techniques. You may contact me using my email IDs info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website superiorprofit.co, X handle Superior Profit, and this YouTube channel Trading Profitably. All these are open to the public. I use Q systems that run on Metastock and TradeStation platforms. These are all the components. I will use several of them in today's session. This demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky, but it does not have to be. Even today, I will talk about some option strategies. Those are not risky strategies, at least for my risk tolerance. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. In all likelihood, just going through that document will not be enough. You will have to try it out to see if it suits you, and if it suits you, how to use it to your benefit. That was the last slide. Let's look back at some of the recent trades that I shared and how I am managing them. And I will try to tie them to today's theme of headwind signals and setups, BHC. Let's look at the chart using the historical trend lines that are broken now. When it was still below these trend lines here, right at the very bottom, in market recaps publicly, I shared that I took a long position in the trade, and I explained why I took the trade before the trend line breakout and what strategy did I use. I used covered call with longer term duration, out of the money strike, short call. Now if you look back, what did I do? I could get an earliest entry by setup. Earliest entry and buying the low was the theme of the previous week's recap. Now looking back, you can see I could buy confidently at jump thrust low, price extreme low, and using this week's theme, I used the headwind signals to buy. I bought the stock. I shorted 7 strike call. Managing a trade is as important as identifying the trade. Identifying the trade is the easy part for me using Q. I mentioned at that time itself I shorted 7 strike call. And in the last market recap, I mentioned that if price goes up and goes to my short strike of 7, I like to book at least partial profit. It is just 3 cents shy of hitting the short strike. Even if it reaches the 7 strike, the delta of the call position will be only 50. My delta of the stock long position I entered at the very bottom is 100. So even if it continues to go up, I will continue to reap benefit from that. But what I plan to do is cover my short call leg, maybe book some profit in part of the stock position also, and let profit run in the remaining position. The stock position itself, I took it in multiple accounts. They have between 8 to 10% profit in the stock position. Looking at the weekly, we can now see that it has very nicely completed a false downside breakout, and for the first week after many weeks, after this very sharp drop, we have bullish backdrop color. And looking at the weekly chart, probably now, if you were not looking at Q charts, now probably it will be of interest to non-Q traders. But I already have 8 to 10% profit in the long stock position. Buying the low, live example, earliest entry buy opportunity, live examples, using bullish headwind in a beautiful way, live example again. I mentioned that it is not uncommon to see a false breakout after bullish headwind, and that's why the recommended strategy is using verticals. Unless you are okay to hold the stock long term, maybe it's a dividend paying stock, as would be the case for GILD, Gilead. Again, a stock that I shared publicly before. Again, a stock that was at jump thrust low, price extreme low with big move up 3 and a cluster of bullish headwinds. Validating last week's theme, buying low, buying earliest entry opportunity. In fact, the earliest entry opportunity was here. I entered somewhere here. Second entry opportunity, you may say. But a beautiful example of how after bullish headwinds, it went up, created a false downside breakout, went up again. I bought after this long candle, breakout candle, and it has a nice dividend yield. If I remember correctly, that's what we could validate using Q Vital. Yes, 4.49% dividend yield. Value stock seems to be doing better. Value stocks are not junk stocks, they are not growth stocks, but they are undervalued stocks. And I'm perfectly comfortable trading them as much I am trading growth stocks. Allows me to trade in all kinds of markets, like the current market included. So GILD had and has high dividend yield, high enough for me, that allowed me to trade it using naked short put, and I am holding the position. I will close at least partial position if it hits 50% of max possible profit. It hasn't done that. Continuing to hold it. Again, a trade I took using the bullish headwind cluster that came earlier at the bottom. Yet another trade that I shared before knowing the results was EXEL. Again, near jump thrust low, and in this case I first shared it in the weekly market recap when the bullish headwind came. That was my buying area. As I later shared in subsequent market recaps, I booked partial profit already when the risk distance was covered, and I'm holding the remaining position with a trailing stop. I can see a bearish headwind has come now. However, the candle shape is indecisive. We have a trend line support. Weekly is bullish. Does not lead me to close the position prematurely. I will continue to hold the remaining position with trailing stop. I am in no hurry to exit the remaining position. And the trailing stop, as I showed in last market recap, I think it is already above, well above my buying price, so I have no concern holding on to the remaining position. Again, bullish headwind allowed me to catch almost the very bottom, and yes, in this case the trend lines also helped. Another mysterious component of the Q systems, how the trend lines work. Even I am amazed, don't know why it works, but it works quite well. Anyway, today's theme is headwind. I could take the trade using headwinds right at the bottom. That's what headwinds allow us to do. buy at the bottom, short at the top. Now I'm going to share one stock that I did not identify. A fine gentleman, a trader from the USA, shared it with me during market hours in the last week. He shared it on this day. And this is again a beautiful example of not only a bullish headwind, actually multiple of them at the same price level, but also how the false breakout happened after a bullish headwind. Jump thrust low, price extreme low, big move up 3 happened right at the second bullish headwind point. He shared with me, Mr. Ellis, in fact, thanks for that, shared during market hours. And the moment I looked at the chart, daily headwind, jump thrust low, price extreme low, big move up 3, weekly multiple bottom in the long term chart with a beautiful false downside breakout, I took the position during market hours, and I have a tendency to book partial profit when I have about 5% stock, at least in the current market situation. 5% profit when I have 5% profit. So it gave me 5% profit already. I have exited partial position. I traded it using stocks. I'm holding the remaining position. Now before buying, he shared the technical charts with me, but before buying I did look up its fundamentals, as I always do. And it will be worthwhile sharing the fundamental scorecard in today's session. You will see why I did not wait till the end of the day. Again, value stocks seem to be in favor, but this is not only a value stock, it is a high growth stock, turnaround candidate, accelerating earnings growth, and a very high dividend yield of 11.3%. So when I looked at these fundamentals during market hours itself, I took a long position and I am continuing to hold the remaining position. Looking at the dividend yield, I have no concern about holding the stock longer term if need be, but I could also exit the remaining position with trailing stop, making sure the trade as a whole is profitable even if the stock ends up comes down from here. Now, why I may exit is if I see the industry is suddenly coming down. So why don't we check out the industry score from QH? As of now, it is a bit patchy now. Weak, strong, weak, strong, weak again. And in pace also, acceleration, deceleration also, I see that patchiness, very strong, very weak, little bit weak. So this patchiness in industry score is one thing that I am having in mind, and that may lead me to close the remaining position with the remaining position also in a profit, or at least the trade as a whole in a profit without just waiting for the dividend yield. And that's how I am looking at all the dimensions together to manage my trade. And this managing of trade is very important. You know, I share many trading ideas in YouTube channel, Trading Profitably, on Twitter handle Superior Profit, but that is just the beginning of a trade. We have to know how to size the positions, we have to know what strategy to use, stocks, options, what kind of options, if options, when to exit, how to exit. I am not offering any trading tip service. I have a very free life after leaving job 12 years ago. So sometimes I am sharing how I am managing the trades in these recaps. How you will manage is depending on your style of trading, of course, and you will have to probably find it out after trading for a while. This is how I am managing the stocks: BHC, GILD, XL and now BRY. All those were examples of bullish headwind. Many were by the low, some were even earliest opportunity buy setup. I mentioned earlier there are also bearish headwinds in current and recent markets. Where are they? I also mentioned Nvidia. And I tweeted about Nvidia a few days ago. Which day? You may look at the Twitter page. Right on the day, Nvidia displayed a bearish headwind at the very top. In fact, it made a new all-time high on that day. It also had a gap up open. The stock was overbought for many days prior to that, and at the close of the day, of course, it displayed the bear release signal, but it had a gap up open and then it started to come down and the bearish headwind started to appear. Therefore, I know and you know there was a possible gap short trading opportunity on that day. That would be on this day. Let me try to align the days in daily and intraday chart. That was the day. Okay. So this was the day when I noticed it opened with a gap up at a new all-time high, and then it was starting to come down. It came down below early range low and I shorted it using stock. I put my stop at the high of the day. The stop was never hit. It fell down, covered much more than the risk distance. And I booked partial profit when the risk distance was covered. When I tweeted about the trade, I mentioned that one thing that may lead me to hold the remaining position overnight was the bearish headwind at the top in daily. And one thing that might lead me to close the position would be if the trend line support held. And in fact, the daily trend line support held on that day. Let's switch back to the historical trend line chart. I shorted it right at the top when it made a new all-time high, gap up move and a gap short day trade setup, but I saw the trend line support held at the close of the day and I did not wait. I closed the remaining position. So I am out of the Nvidia short position. I traded it using stocks. Now, if I go back to weekly, daily, weekly is indecisive with a bearish indecision at the top. Daily is bearish color, but it does not allow me to short because there is a trend line support. This is one example where I stated that if I was not, but if I was continuously using naked short put as it was going up, 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 looking at the bearish headwind and the short setup, gap day trade and the current situation, I would at minimum switch to short put vertically. But I would not do that. I have no bullish view on Nvidia as of now. In fact, if Nvidia goes to the previous all-time high, crosses that and immediately, and the keyword is immediately, immediately reverses down with a false upside breakout, I will be very happy to take a short trade in Nvidia, probably using short call vertical at the very top. Again, the keyword is it has to immediately come down from after making a new all-time high. And in fact, last week I traded an instrument at the new all-time high. exactly in this manner. And the more you watch my videos, the more you see how unambiguously and confidently I am anticipating a setup. It may or may not come, but if it comes, I have no need for second guessing. I have decided everything, including strategy. I just take the trade and then manage the profit. And if I have to cut loss, I do that. But if I'm using short call vertical, of course, it is a defined risk strategy. I have no need to exit the trade prematurely. I can simply let it run. Nvidia is one stock that has displayed a bearish headwind at the top, and it is a mega cap. Are there other mega caps with bearish headwinds? Yes. And the mega caps were market leading stocks, many of them. Amazon has no bearish headwind in daily, but in weekly it had a bearish headwind here, then another one at the same level where we had the false upside breakout. Both of those times we could take profitable short swing trades in the daily interval. Again, the preferred instrument would be using short call vertical. Both would be quite profitable in the daily interval. And now it has gone up, but if it closes little bit lower, it will create a false upside breakout. Remember what I mentioned? It is not uncommon after a headwind signal, bearish headwind in this case, for the instrument to create a false breakout. It made one here, didn't sustain, and one may come next week. However, this time, unlike last time here, this time the false upside breakout would not allow me to short because there are trend line supports nearby. So I will have to wait till all these trend lines in weekly, daily, one after another gets broken before taking a short trade. But it is making me cautious looking at the bearish headwinds in weekly and the possibility of false upside breakout even now. Market leaders, the mega caps were market leaders. Several of them are showing headwinds. That's a cause for concern as far as mega caps are concerned. Not necessarily all kinds of stocks. I already talked about several buying positions I am holding, so I'm not bearish on the market as a whole. Let's look at another mega cap, Meta. Almost mysterious. That's why I use that phrase describing headwinds. For Meta, now if you look back, this bearish headwind came at the very top when it made a new all-time high in weekly. You could switch to daily, look for swing short trades, again preferably using short call vertical. Those should be very profitable. And now on Friday we have a bearish headwind again, cause for concern. It also broke below one trend line support, cause for concern. However, there are other trend line supports nearby, so I am not able to short it at present, as I could do it when the bearish headwind appeared in the weekly at all-time high. Interestingly, we had bearish headwinds in Meta as well as Nvidia at all-time high in either daily or weekly. In any case, now I am concerned about Meta. Certainly, I am not going to buy it. Microsoft, continuing with the theme of headwinds, we had a bearish headwind in weekly here, a false upside breakout, bearish headwind again, then price pulled down. So we could make a profit at either of those two bearish headwinds using short call vertical. That's why it is important to use short call verticals, not to get whipsawed out by a false breakout. Of course, this is weekly interval. Swing trades will be finally taken in the daily interval, but you could use the weekly signals to then switch to daily to look for possible trades. And now in daily we have a bearish headwind here, And once again, a false upside breakout and immediate coming down. That immediacy is important. Immediately coming down, a false upside breakout. Microsoft is one where I would not mind taking a short call vertical as far as technicals are concerned. But I did not look at the fundamentals or industry strength. I will not do that. I have many things to cover, but you might look up its fundamentals and industry score to see if it allows us to take a 360 degrees bearish trade using short call vertical. Those are defined risk strategies. And Netflix, another mega cap, very close to the new all-time high that was made 1 week ago. This time it tried to go there, almost reached there, but not quite. Then displayed bearish headwind in both weekly daily. Remember, bearish headwind is significant, and when they appear in the same instrument in multiple intervals, weekly daily in this case, that is even more significant. Netflix is a stock I will not buy now. Only reason I could not short on Friday, maybe I have shorted partial position, smaller position, but I would be happier to see it break below the trend line support. Then I could, actually I have a short call position in Netflix, but I will be happy to see it break down below trend line support. Then I would add to my short call position, make it a full position. Short call vertical, not short call naked, of course. Let me be very clear, not short call, but short call vertical. I have some position already in Netflix in that. Now, why I traded Netflix already, but not Microsoft? That answer comes from the vital score that I checked out. In fact, Microsoft did not come to my notice also. That was another reason. There are many stocks to trade, too many for me to identify in real time before market close. I was very happy to see Mr. Ellis share a trade idea. I took that, I made a nice profit. If more people do that in the Q Trading Club, we all could benefit. I already share ideas, but I cannot identify all opportunities in real time. Netflix, I could, it was not fully ready. Trend line support was not broken, so I took a partial position. And before that, I looked at the fundamentals using Q Vital. It has high growth, but hugely decelerating earnings growth. I like this earnings growth when I buy, and when earnings growth is tilting down, it's turnaround candidate, but bearish in this case because earnings growth is hugely coming down. I like to short those. And though mega caps are strong overall, maybe not this week, but overall they were weak. We can see for 5 day, 2 day, 1 day, and last day. 5 day, 2 day, 1 day, actually now real time is not there. Steadily coming down, not going up anymore. And there was another reason why I chose, two reasons actually, why I chose this as the shorting candidate. Insiders are not bullish. Okay, there is one, two more reasons also. Let's look at the industry score. All this I could do in real time. Didn't take me time. It is showing very high deceleration. Earlier it was one of the strongest industry, showing deceleration. That's a turnaround candidate, bearish candidate. I like to short those. Turnaround candidates, when they are bullish, I like to buy. Turnaround candidates, when they're bearish, I like to short. But one more reason was there, and that was from seasonality. With one more click, I check that out. June is ending, has ended as far as trading days are concerned. July has no bullish seasonality. Well, it is not bearish also, but slightly reducing bullishness or slightly increasing bearishness. Not enough to take a trade based on seasonality alone, but I did check that out also before deciding on taking a partial position, not my full size position, on Netflix bearish trade using short call vertical. Again, coming back to the chart, if it breaks below the trend line support next week, I'll be happy to add to my short call position. Again, not short naked call. I never trade short naked call, short call vertical position. Now, if mega caps, several of them are showing bearish headwind, as I mentioned, that is also more significant than only one having a bearish headwind. Netflix having in weekly, daily both, the bearish headwind is more significant than having in only daily or only weekly. Now, if that is so, how is the mega cap index as a whole? And we can find that out from the Q breadth chart. Weekly has bearish indecision cluster. One is important, two is always something to take note of. Not a time I'd like to buy mega caps. And in daily, on the mega cap index as a whole also, we have a bearish headwind at the very top. Again, this instrument itself could not be shorted. If it could be shorted, it cannot be. It's a custom index. But I would not short it because it has multiple trendline supports one after another. But having a bearish headwind in the strongest pocket of the market is a cause for concern for that pocket. This week's theme: how to get a hint from the market at the top or bottom. I showed several stocks that I bought at the bottom: BHC, EXEL, BRY, etc., using bullish headwind, and there are concerns in multiple mega caps, and I shorted one of them using bearish headwind at the top. That was mega cap index. How is the total view? Let's close this one. Total view, the other very useful breadth chart, I refer to that every day. As far as the breadth chart is concerned, whether the total view index or the yellow line here, percentage of stocks above 50-day moving average, or the other oscillator like percentage of stocks at 50-day moving average, but faster one, the 3-month new high low, none of them are giving any signal. They are almost unchanged from 1 week ago. Even the growth versus value and small cap versus large cap are almost unchanged, directionless. Last day on Friday, the growth versus value tilted down. So as of Friday's close, I am happier to buy value stocks if I am buying. Small cap versus large cap, as of Friday's close, tilted up, so I am happier to buy small cap, maybe mid cap, if I at all decide to buy. Do I decide to buy? So far, the mega caps are telling that it is not a time to buy, but that is one pocket of the market. The market breadth total view is not giving any signal either way, bullish or bearish. So we have to continue looking at the other dimensions to decide what is our preferred trading direction or my preferred trading direction. The analysis I am looking at, they are quite unambiguous, so I would suspect we all would come to more or less the same conclusion. Let's look at the stock industry sector breadth. Is that telling us to buy or short or stand aside? Sector industry stock breadth 1 month to 1 day for sector industry stock. 1 month long-term period bearish, looking at the color only. 10-day period turned bullish. This week is neutral, neither bullish nor bearish, but Thursday, Friday turned more bullish. Bearish turned to bullishness, neutral, and then bullish again. That is allowing me to buy stocks. And from what I saw in mega cap custom index and several mega caps having bearish headwind, this buying preference will not be in mega caps. What about bucket analysis? Again, neutral, almost equal percentage of stocks are above and below mid Bollinger Band. But compared to Thursday, the percentage of stocks above mid Bollinger Band on Friday increased quite a lot. That's a reason to look for buying. Again, not mega caps, but other stocks. Overall, the distribution shows it's neither overbought nor oversold. So far I am more inclined to buy and buy non-mega cap stocks. Probably value stocks, that was the hint from total view. But we are not done yet looking at the market. We did not look at the external view. Let's look at that using the market ETFs. SPY. Interestingly, you can see why I chose headwind as the theme. Bearish headwind came right at the very top in SPY. In fact, here on Friday, it made a new all-time high intraday. Remember, I mentioned if the false breakout happens in a way that it hits the previous all-time high, maybe 52-week high, in some cases it is new all-time high, and immediately, that immediate word is key, immediately it comes down, we are able to short at the very top. I did not short SPY at the very top, but the fact that not only we had a bearish headwind, but we had a false breakout at the same bearish headwind level, and we have a trend line breakdown. The next trend line is far below, and on top of that we have a bearish indecision cluster in weekly. It's not giving any confidence at all to take long positions. But SPY is hugely influenced by mega caps. Overall, I am still continuing with the view that I am okay to buy stocks rather than short, but mega caps I'm not going to buy, and as I disclosed, I have at least one mega cap short position already. I may have others as well. QQQ. Again, very heavily influenced by mega caps. And again, we had a bearish headwind in daily at this point. On Friday, it made a new all-time high intraday basis, and immediately it fell down, creating a false upside breakout. The again keyword is immediate. As of Friday's close, it broke down below trend line support. The next trend line support is far away. Again, we have a bearish indecision cluster in weekly. This is where I took a short position, and let me go to the pivot chart. See how I am benefiting, meaning making profit, adding to my profit using bearish headwind. I knew the bearish headwind came earlier here. I knew the SPY had a bearish headwind, I think on the same day. I knew both of them were going up and hitting the watermark resistance created by the bearish headwind, and immediately it was falling down. I knew the weekly had a bearish indecision already in the previous week, and I knew what I tweeted, that in real time. On Friday, I shared this one as of 11:12 a.m. But I was already in the trade long before that. Probably it takes me time to cut paste the snapshots and share it. This is Friday, June 28th, 11:12 a.m. Eastern Standard Time. Nasdaq 100 QQQ was the strongest, and at the very top, this is the USA market percentage chart in real time. At the very top, it made a new all-time high. Then it started to come down. But notice what the mega caps did. In the beginning of the day, mega caps actually fell down. It is very difficult for QQQ to stay up if mega cap falls down. However, mega caps recovered. When it recovered, the initial up move at QQQ accelerated, made a new all-time high, as if market wanted to lure people into buying, but not me. I was looking to short at the very top. The moment it created a false upside breakout and I saw mega caps were turning down, I took a bearish position in QQQ using the QQQ chart. Let's go to that now. It was still morning session, so I was using 5-minute chart, and now the trend line resistance is not there, but at that time there was a trend line resistance here. It went above the trend line resistance, came down. The moment I saw the bear release signal, and I saw all the other things that I showed you already, bearish headwind, false upside breakout in daily, mega caps coming down, I shorted at the very top, and my stop was just above day's high. Of course, the stop was not hit when I had much more than risk distance covered. I booked partial profit, but that's not all. See, trading management is very important. I spend more time on that. Finding the trade, identifying, anticipating, that part is coming easy, as you can see. I did not short QQQ itself. I bought SQQQ because it has a multiplier effect. It is triple X. But I use the QQQ chart to take the trade. I booked partial profit in the long position in SQQQ, and at the close of the day, see, I traded with SQQQ. I would rather trade it with short put vertical for SQQQ, but I traded it with long SQQQ. So what I did at the close of the day, if I go to the SQQQ chart, SQQQ, it's easier to look at the QQQ chart because it's much more magnified. SQQQ is right at the bottom, and see, SQQQ has multiple trend line resistance, not very close but not very far, and SQQQ also had the opposite signal, bullish headwind, false downside breakout here, and it went up, it had a break up also. So I already booked partial profit. In fact, I booked profit in slightly more than half of my position, and looking at the trendline resistances here, right before the close, I shorted a call at the resistance level. So I made it into a covered call. It is very difficult for me to make a loss in the trade overall, even though it is having trendline resistance in both weekly daily. Because of the fact I have booked profit and because of the fact I have converted it into a covered call, it is very difficult for me to lose in the trade even if it comes down now. But I am not expecting it to come down. Even if it comes down, I will come out of the trade with a profit. I am quite confident about that. And that is the trade management part, the strategy part and management part, and booking profit, partial profit part. That is where I spend my focus. an instrument QQQ in this case where I could short on the day it made a new all-time high. Not very different, but somewhat different from Nvidia, which I also shorted on the day it made a new all-time high. The difference is that QQQ I am holding the bearish position with confidence that I'll come out of it with a profit after booking partial profit, of course. So that was QQQ and SPY, both displayed bearish headwinds, both had a false upside breakout, not uncommon with bearish headwinds, both had breakdown from trendline support. What about Dia? Dia was not near market high or all-time high, so bearish headwind did not come in recent days. But if you remember the YouTube video I made at that time, I announced I shorted Dia right at the very top using the bearish headwind and false upside breakout, the concept of this theme of this week's webinar. In weekly also, the more you look back, you see both the bearish headwinds led to large enough drop to take bearish trades in the daily interval. Again, preferred instrument would be short call vertical. Works in almost mysterious way. I don't know why it works, but it works. Right now at the right edge, it is indecisive in both weekly, daily. I am not going to decide my preferred trading direction based on Dia. So far QQQ SPY I am bearish, but they are heavily influenced by mega caps. Looking at the other angles that I looked at, sector industry, stock breadth, bucket analysis, I am continuing to hold my bullish view on non-mega cap stocks. Let's look at IWM. See how different things are coming together. Again, this week's theme, bearish headwind came at the very top of the swing high. Bearish headwind came at the very top of, at that time, recent high at least, in weekly as well. Profitable short opportunities using short call vertical. Now, as of current date, it is indecisive. By the way, the bullish headwind led to a nice move up that could be taken as a profitable short put vertical trade. I did not take it. I mentioned in the market recap, if it goes up, it is only going to be in the middle of the triangle pattern. So that's a no trading area for me. I was not going to trade IWM, but I did trade several small cap stocks. BRY that I mentioned, just a $3 stock, I already booked profit, high dividend deal. So I looked at the bullishness of IWM, relative bullishness, and I traded some of them. And in fact, if you look at the Finder Radar weekly interval for the market ETFs, you see only IWM is up for last 3 weeks in a row. Again, a reason for me to continue to be bullish in the market, but not on the mega cap stocks that are highly influencing SPY QQQ. DA is relatively better, but it is also down this week. So I'm not keen to look at industrial stocks, but there are other stocks I may look to buy. So far I am having the same view that I am okay to buy, but not mega caps. No reason to short other than mega caps. I have shorted some. Let's look at the technical break then. Daily interval tells me that it is okay to buy. Technical break weekly interval tells me it is okay to buy. So my final conclusion looking at the market from all these different angles is that I'm not going to buy mega caps. I have shorted some. I have a short position in QQQ using bullish SQQQ instrument, and I have some bullish positions in stocks. Now this week's theme is headwind. Why don't I try to find some headwind setups as of Friday's close? That was my aim. So I came to the daily setups. I see there are 9 headwind possible setups out of thousands of stocks, liquid stocks. At one glance, I know there are only 9 stocks I may look at, and interestingly, see, many of them are at price extreme low. The headwind works mysteriously, comes at extreme low for bullish signals, extreme high for bearish signals. But I'm not going to open the 9 stocks. I want to look at their fundamentals. I'm going to consider buying only those that are fundamentally strong. So 2 clicks, I can generate the scorecard, and I instantly notice using the heat map that there are 2 stocks with very high dividend yield. One is VOD Vodafone, one is WU, I think Western Union. Both are also undervalued stocks. Remember the market total view that was favoring value stocks over growth stocks as of Friday's close. Over the week it is indecisive sideways, but over Friday, maybe Thursday, it is preferring value stocks. Vodafone, WU, both are in that category, very high dividend yield. So let's check their technicals. If there is a resistance or something. WU, Western Union. Yes, Western Union. It's a nice stock because it has a long-term trend line support, has a bullish headwind, has a false downside breakout at the watermark support, but there are too many resistance lines, and the weekly is very indecisive in shape, bearish in color. See how I'm looking at everything. I'm trying to find reasons not to buy. My preferred trading direction is long. I looked for bullish headwind trades. I found a high dividend yield stock, but still I'm looking for reasons not to buy, and the moment I see several of them, I'm not not considering that. But what about Vodafone? Has an even higher dividend yield, and this one I like because it has a trend line support and very close to trend line resistance, only one, unlike Western Union WU, which had many one after another. Resistance only one. So Monday or next week, if it can break out of the trend line resistance, I am very happy to take a long position in Vodafone. Now it has very high dividend yield, so if that is enough for you to hold the stock long term, if required, you could also short the naked put at this trend line support level, thereby effectively increasing the dividend yield on an annualized basis. You could go for longer term short put as well. I did not find the stock before market close, but now I'm doing it live and I'm going to keep it in my watch list. Let me delete all the other stocks. Next week, I would not mind taking a long position in Vodafone, either using short put if options are liquid. I have not checked that. Or if I use stock, then I will wait for the breakout. If options are liquid, I may not mind taking a short put naked position looking at the high dividend yield. Let's go back to the other stocks. So these two stocks we looked at. Vodafone is one I prefer, 10.8% dividend yield. Now among the remaining stocks, let me look for either value or high growth stock, and I am left with only two, AXTA and APTV. Very systematic approach, disciplined approach, easy approach, unambiguous approach. Let's look at both of these stocks, AXTA and APTV. AXTA, it has a bullish headwind, that's what we saw. In daily, it even has a daily trend line breakout. It is a value stock, but the headwind signal itself is not enough for the setup. The setup has a checklist condition on weekly that is not met. So technically it has a breakout long setup but not a headwind long setup. Looking at the weekly, I am not that comfortable taking long position, but APTV, you can see I have already put it on my watch list. Let's go back to its fundamentals and let me create a one-page scorecard. Certain things become immediately evident from the one-page scorecard. As you can see, all green color. All the three last quarterly periods, all the three yearly periods for earnings, all the three quarterly periods, all the three yearly periods for revenue, all are green. It's a steady stock with increasing earnings growth. Steady stock in terms of earnings revenue growth plus increasing earnings growth for 2 quarters in a row. The stock is profitable. In the Twitter, I mentioned last week, I booked profit in several positions last week, and the ones I closed first were fundamentally weaker. And this is what I looked at. If the stocks were not making profit last 12 months, earnings per share, or last quarter, or last financial year, consistently these three were not green, even if it was value stock or high growth stock, I closed those positions first. The ones that I am continuing to hold, again trade management is important and I am looking at all the dimensions together. The ones that I am holding, Excel, EXEL, BRY, BHC, all those are actually profitable stocks. They are less likely to come down. The loss making stocks go down first in a market down move, but APTV is a profitable stock across the board, steady and increasing earnings growth, a short squeeze potential, and notice this. SPY QQQ broke down below trendline support, but see 87% of the industry's peers are strong. As I mentioned, mega caps, they have no reason for me to buy now, but there are buy candidates and this is certainly an industry. What about its relative score? Industry score, one of the most accelerating, a turnaround candidate. That is what I like. And coming back to the stock again, in the weekly long-term interval, beautiful watermark support held, created a very nice false downside breakout in weekly with very high volume this week. In daily also it created a beautiful false downside breakout. Many people were stopped out by this big move down 3 right at the bottom and then came bullish headwind. I have not taken a long position. I see there is a trend line resistance. So I will decide based on how the stock moves next week whether I wait for the trend line resistance to be broken or is there a chance to take a long position in the stock using daily time fine tune chart. In using daily only, meaning stop will be so far. If I use daily only, I am not going to take a long position as a Friday's close. If I am using daily, I will wait for the breakout to be completed, but looking at the beautiful base in weekly, daily, looking at the industry accelerating, looking at its steady fundamentals in spite of this decline, I am happy to consider buying the stock using real-time fine-tune charts. So these two I am keeping in my view. Vodafone I may enter it earlier because of the high dividend yield, provided of course it has highly liquid options. I have not checked that. I think Vodafone also had a trend line resistance. So if I am forced to use stocks, I'm using the term forced because I prefer options in this case. If I'm forced to use stocks, I will wait for the breakout to be completed. For APTV, which also has trendline resistance and the support is a bit further away, only way I could trade is using precision entry chart at present. So I have added those two. So in summary, the market has bearish headwinds, but not the whole market. Some stocks, some mega cap stocks, and some ETFs, the ones that are heavily influenced by mega caps, namely SPY, QQQ, they are having bearish headwinds at the top. Cause for concern, I have shorted several of those instruments. Some I have booked partial profit. Yet there are plenty of buying opportunities. It seems value stocks that are having bearish headwind, the reversal signal again, but at the bottom instead of at the top. And I am equally comfortable trading both sides. And that is why Q allows me to trade confidently, profitably in all market conditions. I can look at different pockets how they are moving. It allows me to do that without any ambiguity. Let me share two more slides. I captured it. Why it is okay for me to buy. Though the mega caps are weak, this is a breadth using Q index of Nasdaq Composite as a whole. While SPY QQQ were making highs and highs, Nasdaq Composite breadth was weak over 1 month, but now it is improving. There are reasons to buy. That was Nasdaq Composite as a whole, and NYSE Composite, same thing. Over 1 month, it is bearish, while SPY QQQ are going up because of mega caps most likely. But now it is improving in bullishness, a reason to buy. So I am buying stocks that are value stocks at low price. I am shorting some of the mega caps or ETFs at the very top. We are at slightly beyond 1 hour point. Let me end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session. Have a great weekend. And as these live examples show, as I always say, there is no reason not to do that. Trade profitably. Thank you.